Welcome to Bruce Talks, the show that's all about making crop insurance make sense. I'm Bruce Lantzky, a crop insurance agent with over 25 years of experience and a producer right here in Northeast Iowa.
Okay, so this week, everybody, I thought I'd go back and revisit one of the topics that we did on one of our original episodes, and that's marketing grain and using your crop insurance to do that. With the events of the past few weeks, with the Iran war and the Straits of Hormuz, I think we all realize that, hey, we've turned the page and hopefully have had some higher price environment to make some cash sales with. And the thought process here is utilizing your crop insurance to have confidence to make those sales. Higher prices offer opportunities to lock in profitable margins. The fear is always, what if I forward sell and the crops fail? Crop insurance is going to serve as that risk management tool, and it's going to allow you to secure these gains without the fear of having a production shortfall. So with revenue protection, it focuses on that 75 to 80% coverage to protect against both yield and price drop. Okay, so you have the higher of benefit. What do I mean by that? It means that RP uses the higher of the spring-based price. In other words, $4.62 in corn this year and $11.09 on beans, or the higher fall harvest price. It's going to protect you even if prices rise significantly after planting. This allows you to commit to the forward contracts knowing that your revenue is safe. The action here is to secure your high prices in the spring and the summer. If yields drop, insurance is going to cover that gap, preventing penalties from contract non-delivery. So it's going to give you a reduced fear of being overcommitted and probably have a better ability to handle volatility. So let's look at taking advantages of rallies. This is a scenario where I think we're currently in. Often the highest prices occur before harvest and during times of uncertainty. Well, I think we're definitely in times of uncertainty here. You can make incremental sales throughout the growing season to lock in these high prices rather than having to wait for harvest. The outcome is going to be an improved sale price, which is going to improve your working capital, and the avoidance of forced sales at low prices, or better yet, even the avoidance of forced sales at harvest when basis is typically wider. So let's look at an example here. You have some high forward contract prices in July. Let's say you've got 60% of the crop sold on forward contracts at some top tier prices. You can continue to sell that 20 to 30% of your crop at incremental sales, continuing to push your prices up higher as we go. And you can keep that 10% for a spot market or just unexpected shortfalls. This is going to give you higher sales, but also your crop insurance is providing you a revenue guarantee, which sits behind those contracts. It's going to assure you that even if you forward sell, your insurance is going to act as a safety net in case you have a yield shortfall. So what are some of the common pitfalls of this thing? First off, don't overcommit. Know what your guaranteed bushels are. If we go higher and you have 150 bushel an acre guarantee, don't go and sell 160, 65 bushels an acre, even with a higher price. It's just a little bit too risky as far as the ability of, if something were to happen, you are going to be short on those bushels. Watch your basis. Sometimes you can lock in the futures price, but leave the basis open to capture potential improvements later on. And finally, just know your cost. The goal is profit. It's not just the highest price. So always ensure your sales exceed your cost of production. Hopefully with these higher prices, hopefully going to have an ability to make a total sales to where we're going to have some profit. So what are some big things we can look at here? First of all, verify your crop insurance coverage. Once you have crops planted and you report your acres, make sure that you have a very good understanding of how many bushels of guarantee you have. Then know what your break-even point is. That's the next thing, is figuring out, hey, where do I need to be on a bushel per acre if I only have my crop insurance guarantee to cover all of my costs? And then let's go ahead and create that plan. You can check back to some of my earlier podcast episodes here and see how do we go about setting up an actual plan as far as target prices and quantities. Use these in-season rallies to sell it. Using insurance is going to give you a peace of mind to do that. Okay, so this is a wrap on the episode of how to use crop insurance to help with your marketing plan, especially in these high risk, high volatility environments. Don't be afraid to sell grain as prices go higher. Remember, you have that crop insurance behind you as a guarantee. And as the prices go higher, if we continue to rally, you'll have that additional guarantee to where if you're short bushels, you'll be able to cover your commitments that you've already made. If you got questions, feel free to give me a call. Love to talk with you about it. With spring coming up, just want to remind everybody to be safe out there and have a wonderful and safe season.